Hi, this is Randy Finney with the right side of the chart, and this is a midday update for Tuesday, February 26, 2019. I wanted to do this one, get it out midday. I have to cut out for an appointment here in about a little before 3 o'clock today, so I'm not going to be around for the close and may not be around afterwards to do a market wrap. Unless something big happens, I'll make a point to put one out later this evening. But just want to do a midday update on a few things I'm watching. What we're going to look at are just a very brief overview on the major indexes via the ETFs and the futures. We'll touch on crude, gold. I'll touch on Bitcoin quickly, and I think that's about it. Just really looking at the major asset classes. I don't think there's anything very compelling to cover in bonds right now. So let's just go ahead and start with the NASDAQ 100 futures. Let me get rid of this line. Don't know where that one came from. All right, so we're looking at a 60-minute chart of NQ, the NASDAQ 100 futures, same trend line I've been watching. There's a breakdown, back test right here at this point, back test after the breakdown, and then I believe it was in yesterday's update, I added this minor uptrend line, which is broken. So here's the thing. We've broken down. We came in for a back test. We reversed off the back test, but we're still not moving impulsively lower. And what you want to watch for at this point are basically these reaction highs. My thoughts on chasing a rally or taking any longs when we're so extended. Again, doesn't mean we can't go up, just not how I trade with divergences flashing, the market at major support on the daily charts, everything else. So what I'm doing here is I like to do is outline the case that I think is the most likely, whether it pans out or not. So what you want to watch for are breaks of the recent lows. So in other words, that's today's low right there. Here, we'll tighten it up a little for you. Here's today's reaction low. Break of that level should open the door to some more selling. And then, of course, there's that low from Thursday of last week that I really want to see taken out. And then I might consider adding another official trade on the indexes, QQQ, maybe IWM as well. All right, so that's what we're watching for on at least on the futures. And let's just look at the S&P 500 real quick. Same story, the trend line off the 27th that I've been talking about. We had a little whipsaw breakdown there, snap back into the wedge that is, and just continued to diverge. We put in another, what I call YADA, yet another divergent high, YADA. There's yet another divergent high at that point, breakdown again, a back test. I still think the trend line is valid since there are enough reactions here, even though we had a little whipsaw signal there. But again, we need to get some downside traction. The story remains the same, that the dips at this point, they're being bought up, but they're not being bought up aggressively. Before early in the rally, you'd have aggressive buying stepping in on the dips, and you'd clearly go to new highs lately, as you can see. And again, that's what these momentum indicators tell us. That's why they're diverging. That's why they're moving lower, because each dip is being bought up with less enthusiasm than the previous ones, at least as of recently. Oh, let me add a line right here for you before we get away from ES. I do see a trend line worth mentioning here. I'll just add it right here with this tool. We have a nice little support shelf. You can see the reactions that I'm capturing here. Comes in not too far below. I have to give you a level there. I'll put on crosshairs for you. That's about 2771 or so. That's definitely I think an important near-term support shelf right there. So let's box it in like this. And if we get a break of that, of course, that would take out today's lows. Yes, we have last Thursday's low a little bit below that, but you can see quite a bit of reactions there. So there's another level to watch. And let me jump over to the daily charts and talk about those potential bearish candlestick or island top patterns. Here's QQQ. So again, an island top pattern. You can either have an island cluster, which is a cluster of multiple candles, or a single candle. So this is called an island top. And what happens is you have a gap on each side. Now we gapped down today, and we did, as I suspect it might be the case, they ran it back up to about the midpoint of yesterday's candle. Yeah, ideally you want to see gaps on both sides. Today's candle down here, that's textbook. And like I said, you have to give this market the benefit of the doubt. So I still do maintain what I said. I think a short today on the gap down with a stop just above Yesterday's highs is objective and offers a very attractive risk reward with just over a 0.5% downside if that it popped out. If you shorted today, let's say on the back test, that's about where we opened. And again, a lot of downside potential. I'll get to targets in a little bit. If I add QQQ back as an official trade, I will be revising the targets from the last trade. I just want to mention that somebody asked that today. So at the end of the day, or well, right now midday, essentially where we're at is this is not very convincing yet. This action, big dump in the close, a big red candle today would certainly help that case. But again, watch those levels that I talked about on the 60-minute charts of the futures, and we can also look at levels on QQQ here in a second on the 60-minute. I just want to jump over to SPY real quick. Look at the daily candle there. All right, so similar story. You can see the gap. I'm really zooming in here on SPY. It's not a huge gap, but there's yesterday's gap, and of course we gapped down today. SPY really came in. You can see right at about when I put the crosshairs there, the body on today's candle is about even with a backfill of the gap. In other words, yesterday's low of this candle. That's the top of the gap. So. Again, work to be done. Let's not try to read too much into this right now. Again, I wish I was here at 4 o'clock at the close. I would, give you some thoughts as to what happens. But again, if you start to see a big dump into the close, that was a change of character. But I always say this: one day doesn't make a trend. I'm referring to yesterday. Let's go to a 5-minute chart. The trend lately has been one of buying into the close, or at least the market holding up. That shows accumulation. ETFs square away their positions. At the end of the day, inflows and outflows, they have to match that. And so we've seen a lot of buying, or at least futures holding up into the close. It was a little dump there. But yesterday, you can see a big fade all the way down into the close from the highs. And normally, again, this was a positive day. There was a little selling at the end of the day. But the trend lately has been upwards. There was a little dump into the close. So as I say, one day doesn't make a trend, but something to watch for today. Let's see if you see a dump into the close again today. It would be indicative of redemptions being hit on mutual funds and ETFs. In other words, SPY, QQQ, when you buy or sell that ETF, you have more purchases of the ETF. The ETF company has to buy more futures contracts to square away their position, and if you have more redemptions, that means long selling or shorting. Then you have to sell, and they do that usually in the last few minutes of trading. And the 60-minute charts of SPY, you want to give it the benefit of the doubt. Here's a comparable trend line off the lows on the 27th. Misses this one a little bit, so you won't always have SPY matching the futures. That's why I watch both. Futures trade virtually around the clock, where SPY is only 9:30 to 4 p.m. So you have a little bit different trend line. You want to give it the benefit of the doubt, stretch it out, so we don't really have anything clearly impulsive. By impulsive, a big red candle, big move, something like this, or getting down to these levels here. So that's one line to watch on SPY. I can show you a couple other ones. Here's a trend line there. So it's a little work to be done. And again, with this trend being as resilient as it has been, you have to give it the benefit of the doubt at this point in time. QQQ, I have several trend lines here. This one. They all come in together. And same story with the futures. Pretty much a breakdown, not very impulsive, and a back test. So we really need to, again, undercut last week's lows. A start would be to undercut today's lows intraday today and close below those, put a big red candle, and then follow up would be a break of last Thursday's lows. Okay, let's look at crude oil via USO first. USO is one of the more popular ETNs that tracks crude, and does a pretty good job of tracking with minimal decay. So I like to use this chart. And you can see we had a divergent high at least on the PPO while we ran into this 1214-ish resistance level. And to me, this level was much more significant, as I pointed out recently on the daily chart. I'm sorry, that was a daily chart. This is a weekly chart. As we had this multi-year basing pattern back from 2015 into all the way into early 2018. We broke out of that basing pattern there. We back tested it successfully there, had a nice uptrend. That ran right into resistance, which was pointed out at the time around 1611. and then the primary uptrend line, as you can see in this price channel, broke, and boom, that's what happened. So now fast forward to where we're at today. What's happened since then is we've had a nice strong kickback rally right to the top of that former basing pattern. And again, this is the way technical analysis works. Resistance, once broken, becomes support, and support, once broken, becomes resistance. So I think that line is still very much valid. And again, that's where we ran into recently. We also have not far above, if it wants to make a pop, you can see the 200-day, this red line coming in there. Did a great job, as I'm showing you here, defining that uptrend. Great job here, all the way up here, of defining the downtrend. Doesn't work well, nor do any moving averages during a choppy sideways trending market, or trendless market, I should say. They work good in trending markets, and that's what we had there. So again, so there's crude at resistance on a weekly. Doesn't mean it can't pop above there, and if it does and puts a solid green candle, maybe comes in back test and starts to move higher, well above that $12 range, that's certainly longer term bullish. Otherwise, like I like to say, resistance is resistance unless taken out. So that's what you're looking at there. We could get another leg down. That arrow is not drawn to where I think we're going now. I'm just more focused on the shorter term charts. But if you want to know what I think a logical or a likely scenario is for crude, you have the bullish PPO cross recently, but you're starting to roll over here. So I wouldn't be surprised to see that PPO turn back down. RSI is already turned down, then come back up. So if you get another leg down like this, let's say towards the bottom of that zone, anywhere near there, it would look something like this. Let me put in my arrow tool here. That would then put in a nice divergent low right there on crude and might set up a longer term trade. One very far off potential scenario, we'll just watch right now. But the takeaway again is that crude ran into support recently, and so far it has stalled out and pulled back a little bit off that support. Let's look at it shorter term. Okay, this is CL 60-minute chart. This is the chart I've been posting on the front page recently and in the trading room. And the story was this. This is last week I said next sell signal would come on a break of this trend line. We had been diverging for a while. Nice divergence steepening there. Broke down back test, a very impulsive move following that. It's a nice trade so far. Went right through my first target, and which is support around 56, right around there, $56, 56.05. And you can see today offered another objective short entry on a back test. And so that would be my scenario. Next target is around 54.72. And then this is my, at least for the near term, if things get ugly, target. I certainly think it's a possibility, but we'll have to take out that level. And again, based on what I'm seeing on the daily and weekly charts, I do think this is a possibility. So, anybody that was able to short that or any point in here, there's two ways, to look at any trade. A lot of ways to look at a trade, I should say, to back up. But just like the next short trade on the markets, when we get a convincing sell signal, you can take the short-term approach and just try to game a quick pullback, hit these targets, get a couple percentage points and get out. Or if you think that there might be a considerable drop like that, and let me tell you how far that would be from the breakdown. If I draw a trend line here, that will tell me the percentage. I'm trying to see it. It's around 10%. It's right there. It was kind of covered up by that line. So it's about a 10% drop. So you can short. You have a nice entry. You get this point, not any reason. I can't think of any reason not to lower your stops to break even, at least to your entry. Well, entry would be somewhere around here. Depends where you short it, of course, and or trail down and allow for a runner trade. It's a little big to be a flag, but it is that flagging type action. So you have an impulsive move down, sideways to slightly upwards consolidation, and then a bull flag might play out something like this. So again, set your stops. Even at this point now, that 56.05 is resistance. It was former support, so you could have a stop a little bit above there to allow for a stop pop if they want to just quickly take it above, and then swing the next move down. Quick update on gold. I'm still longer term bullish, but intermediate, like I've said, I've stepped aside from this trade for now. There's just a little bit of, I think I'm more concerned about it being a dead money trade than anything. So I really don't care to be long or short now, although I am looking to get back in soon. for a longer term trend trade. We were able to swing a good part of this first leg up. And here it is on the daily chart. This is one thing giving me pause. I mentioned this before in the last few weeks that we had negative divergence in this price channel. You can see the divergence there. And so far that divergence is playing out. See, we popped a new high, put in a divergent high right here. The divergence is playing out, and there's an uptrend line that if this uptrend line breaks, that would probably bring us down here to 122.40, which could very well prove to be a very nice buying op. So I'll be eyeing gold. We don't always get what we want, but I'd like to see it get down there. And if the charts confirm at the time, maybe get back in for a longer term trade. And it, it may go up, and I may end up having to buy into gold at a higher level if we get some really bullish developments. On a related note, I think any analysis on gold is incomplete without analysis on the U.S. dollar. And this is my preferred proxy, the euro-U.S. dollar pair. It's like looking at the dollar in reverse because it's showing the euro against the dollar, and as I've highlighted recently, this is really setting up for a nice move on both this daily chart we're looking at here and the weekly chart. You can see the strong divergences forming down below on the indicators as we make a low. This is a key support level down here. And so we need to get a breakout here, breakout above that 115,439 level. And that could open up a nice rally in the euro, which would mean a drop in the dollar, which would be bullish for gold. So I'm keeping an eye on these charts. And like I continue to say, if you're a long-term investor, you have gold in long-term accounts, investment accounts, 401ks, IRAs, or even your trading account, if you're holding on to it as a long-term trade, you might have to ride out a little pullback, but I still think the intermediate to longer-term outlook is bullish, and I'm just a little, I'll call it unclear, a little uncertain on the near term, not strong enough convictions to have it as an active trade or at least a swing trade right now. And I figured I'd mention Bitcoin. The last time I brought it up, I pointed out in the trading room, just before it broke out, I pointed out this bullish falling wedge pattern right here, nice divergence and everything else. Within, I don't know, a couple hours of pointing that out, boom, it popped and ran, had an initial surge. What I wanted to point out on it, I missed that when I happened and just had taken my eye off the screen. I didn't have a price alert. I had an order pre-filled ready to go too, and was a nice pop. Now, I can tell you I would have taken profit there. That was my first target, but it continued up. What happened, and I just want to point this out, it trades pretty well to the technicals. You can see I've added a few lines since that chart. Back here you had a strong bullish divergent low. There was also, went away, but it was on this chart before. You had a downtrend line there, big wedge. And so technical analysis works very well on Bitcoin. Why does it work? Because there is no fundamental analysis. Unlike any stock, bond, any other security you can think about, and gold, commodities, they have a fundamental value. Gold has a tangible, it's a store of currency. It's used in industrial metals. Any company, you have several metrics. You have earnings, which are a revenue stream. You have book value. If you sell off all the assets of a company, their building, their computer, their intellectual property, everything else, there's a value there. Bitcoin is nothing. It's not worth anything. But however, like anything that's being traded, like say baseball cards, rare cards, it's worth what somebody is willing to pay. So don't get me wrong on that. So it can go up or down. Because there's perceived value. It's just how much people want it. Now, so where I'm going with that, so Ken, you can't analyze, there's no P ratio because there's no E, there's no earnings or any other, any other tangible value in Bitcoin. However, or the point that I'm trying to make is that's why it trades well to the technicals. That's all people have to really go by since they can't use that fundamental analysis to value it. But you can see, look at this gap. Well, I'll just show you where this line is. There's a gap, there's a reaction. You can see at this point, this is a pretty long time period, but you can see a lot of reactions on that support level. Boom, it stopped cold there, gapped above it, held that level of support, gapped down below it. And on that recent pop, it gapped up again and hit that level. So you can see these lines are levels where it's trading above. And so the takeaway, if you want to trade it, well, break above this level should be bullish, puts it up in this next zone. Of course, a breakout above that line there, about 42.03, would be bullish again. And if I didn't make it clear, these are Bitcoin futures. The symbol is GBTC. or GXBT on this program. I think, what is it? Yeah, I'm not sure if that's what yeah, I think that's what it trades on the exchange as well. And again, so bearish if this level goes. Again, I just wanted to point out these levels. Feel free to ask me if you want to chart. I'm just staying away from this one right now. I don't like this kind of choppy, erratic price action. And also remember, there's somewhat of a gamble to it because you can see these big gaps. And the one thing, when you trade a security that has a lot of gaps, especially futures contracts, which are leveraged, a stop does no good. A stop loss orders are bypassed, or stop limit orders. They're bypassed on a gap. A stop loss order will be filled at the opening price if it's exceeded the stop loss price, so you can be filled far away from your actual stop. And stop limit orders, although they will only be filled at the limit price, if they're gap beyond, they do not fill. So then you're stuck with a trade that can even, the losses can even get worse. So just kind of a little tidbit, keep in mind, know your security, know what you're trading. And if you trade something that's very prone to gaps, like small biotech stocks, it can gap up. I've seen 50% plus gaps on, clinical trials that come out. They have a drug in phase 1, 2, or 3 clinical trials. Boom, negative results or positive results. Those little stocks can fly. And again, even the best place stop will do you no good if the stock gaps beyond that. So that's an important thing to know in trading. And if you're not sure, just look at pull a chart, pull a 2-3 year chart on a security, and just look to see if it has a history of large gaps. And a couple more and we'll wrap up. Nat Gas, congrats again to those that gave a little more room on the recent UGAS trade. Like I say, I personally trade futures because the ETNs don't track that well. There's a little discrepancy all along. This trade looked fine. We had a bullish falling wedge, which was pointed out right here before it broke out. Then it gapped out impulsively the next day, gapped above that first resistance level, hit my first target, pulled back, came in to make a double bottom, tested the recent low. So it was basically about where it was first pointed out here, and since then has been steadily moving higher. And again, the case was made as much, if not more, on the long-term weekly chart. And nat gas prices having fallen to support there, and everything else looked good. So here's your trend you're watching right now. Today, I just want to point this out. This was initially and still is my preferred final target. That's where I'm out, because this is a significant level. I added this target. I can see the possibility going here, and maybe even more. Nat gas is a volatile little sucker. When you get some pretty nice gains like this in short order, it's just me. I like to get out and wait for the next setup. Maybe buy it back here on a pull back to that trend line for another thrust up here to that 245-ish level. But again, you can see the lines that I'm circling here. A lot of it was key support there. Once that support gave way, you had a little back test and then an impulsive move down that validated that was an important support level. Support, once broken, becomes resistance. So I think, at least for the time being, that the risk reward, I think, was worthwhile to book profits here. But again, that's not an active trade anymore, so I haven't updated that. But that's where nat gas is. And I said I wouldn't cover bonds, but let's just look at a couple real quick, and then we'll close this video up. Okay, I want to bring up bonds because, again, they can sometimes give you an insight to the stock market. So you have this is what we call the long bond, in the financial industry. The long bond is the 30-year Treasury bond. So these are 30-year Treasury futures, and this is a trend line I've been talking about. So despite the hawkish flip-flop from dovish to hawkish that the Fed did in response to the market's temper tantrum back in the fourth quarter, which was clearly, I had no doubt that they would do that. Now, what I'm noticing is, despite the Fed backing off in the dot plot, meaning their projected path for raising rates, that has gone down. But remember this, the Fed does not control the long end of the yield curve. They cannot control it. They can try, they can manipulate it by issuing large amounts of Treasury, buying Treasury, but they can't set it. They can't control it. They can only set the federal funds rate in the discount window. Those are the two rates. Those are very short-term overnight rates, and they ultimately affect rates in the economy, especially on the shorter end of the yield curve. But what you have here are rates or the long bond moving up here. So the long bond has been rallying now, and it's rallying off this trend line right here. I will point out, and there's these little divergences here along the way, bullish and bearish. You can see bullish divergences. So these are like little micro trends you can trade, and we have one right now. We have potential. It's, again, only potential. Why? Because the PPO is pointing up, and it can continue to go up, and it can take these divergences out. But it is something to monitor if you're trading this, because I've mentioned this trend line recently, and you can buy pullbacks to support as long as it's in the uptrend with a stop somewhat below. That's objective. That was your last objective long entry here. You can also see some other levels to watch. However, at this point, also keep an eye. We have a pretty significant a resistance level coming up with these 3 reaction highs, or almost 4 right there. So right around there. If treasuries pop above here, the long bond pops above there, you'll see a breakout. And on that too, that would mean, and I should clarify my previous statements, that would mean that if this goes up, bond prices are going up, long-term rates are falling. So it might have been confusing when I'm talking about what the Fed is doing. They're lowering they are not lowering, I'm sorry. They backed off their plans to hike, at least at this point in time. However, what this is telling us, what the long bond tells us, and again, I just wanted to clarify that they're not setting this rate. This rate is set mostly by market participants' expectation of future economic growth. When market participants and the smart money thinks that we'll see inflation, strong growth in the economy going forward, looking out, again, this is a 30-year bond, what happens is the long-term rates will go up and bond prices fall. Remember, bond prices and rates move inversely to each other. So this is telling us something here. This is not bullish for the economy or bullish for the stock market. And somebody mentioned on the site we have an inversion on the shorter term yields right now. And that's also when you have an inverted yield curve. It's not inverted on the long end yet, but again, something to watch. And finally, to wrap it up here, if you get more leverage or juice or bang for your buck, whatever you want to call it, trading the long bond. If you're a bond trader, you probably know that. You have, because the maturities are longer, they're much more sensitive to changes in interest rates. But here's a 2-year, ZT is the 2-year Treasury note. Those are short-term bonds. If they're 5 years or less, or 2 years, 2 to 10 years, you call it a note. If it's less than 2 years, you call it a bill, T-bill. And if it's 10 to, above 10 up to 30 years, it's a bond. But they're all the same thing. So if I say Treasury note, bill, or bond, they're all the same thing. Treasury instruments just talks about the maturity. So here's an uptrend line. Again, same thing. You can see that it has been respecting this trend line all the way since mid-January. With bonds, the 2-year moving up, although not as much as a long bond. And so that shows you also, as somebody mentioned, you're sort of seeing inversion. You're seeing the long bond is moving up a little more than the short-term rates, meaning long-term rates are falling at a little bit faster rate right now than short-term rates. So that's also typically that's not very bullish for the economy, is what I'm trying to say. But again, the takeaway, forget about the long-term stuff. That's something to watch. Here's some levels. I'll add a line right there. Pop above there can bring up ZT a little bit higher. And again, or you can, if you're trading this one, you can buy pullbacks to this level as long as it looks like the uptrend will continue. There are some divergences forming here on ZT as well. So a little pop up there would probably be met with a pullback, especially if these divergences are confirmed with a cross down on the PPO. So just one potential trading idea. And it's nice about bonds. I'll trade them. You're not going to get rich quick. Now, you can leverage up. That's the other thing. And to talk about beta adjusting position size. If I'm trading Treasury bonds, let's say TLT or the future, you can take a much larger position. Why? Because you're not going to lose 3% in a day. Bonds just don't move that much. So your risk is a lot smaller. Your percentage return your return potential in percentage terms is smaller. So therefore, while I'm usually talking about making a beta adjustment to a position down from a typical position size on a more volatile stock or ETF, in this case, I do the opposite. So with trading TLT, I might take a position size, a beta adjusted position size of 2.0, meaning twice what I would normally trade in in SPY or something like that. And now, if you trade futures, of course, they're leveraged, and they're leveraged pretty heavy. So you have a pretty good exposure there. But again, you should know that if you're trading futures. Don't trade futures if you don't know what they're about. Read up and learn. For the time being, you're probably better off if you think this, bonds are right for you. You want them in your portfolio, whether it's an investment or a tactical trade, meaning a swing trade. Then stick with. There's a lot of bond ETFs out there with plenty of liquidity, and you can get the moves that you're looking for. They do a good job also of tracking with minimal decay. All right, so we're going to wrap it up here. And again, anything big happens, I'll do an update later today. Otherwise, we'll pick this up tomorrow. And if anything stands out in pre-market, I didn't really see any changes today, so I didn't do a pre-market update. I was just waiting to see if we gap down on QQQ, and then would mention those potential island tops. So again, if something happens overnight, I'll do an update in the morning. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.